DSCR loans can offer both advantages and disadvantages compared to traditional bank loans and conventional mortgages for rental property investors. As you will learn, the pros of DSCR loans far outweigh the cons, which is why DSCR loans are now the go-to form of financing for rental property investors. Let's take a look at some key pros and cons to consider. Number 1. Streamlined underwriting. DSCR loans have a shorter and less demanding processing checklist than bank loans and conventional loans. Underwriting items for DSCR loans include appraisal, credit report, liquidity verification, borrowing entity documents, landlord insurance verification, and, where applicable, lease verification of rent and security deposit receipt, and property management agreement. DSCR lenders should never ask you for tax returns, W-2 income, pay stubs, or company financial statements. A good DSCR lender can fund your DSCR loan in under 30 days. At Offer Market, our target funding timeline is 15 to 25 calendar days. Number 2. Loan structure. DSCR loans are generally structured as 30-year term, fixed rate, and fully amortizing, with loan-to-value ratio up to 80%. To increase cash flow and boost DSCR to qualify for a higher LTV, you can even structure with a 5 or 10-year interest-only period where principal payments are made over the remaining portion of the 30-year term. DSCR lenders can fund your loan with DSCR as low as 1.0. The 1.1 is where you will find the best terms. Offer Market specializes in no and low seasoning cash-out refi for rental property investors who use the burst strategy. Compare this to traditional banks, which generally offer lower LTV, shorter term, higher DSCR requirement, and 6 months of seasoning. Number 3. Reliability. DSCR loans are a growing component of the multi-trillion-dollar institutional credit market. While DSCR loan origination volume is growing fast, it struggles to satisfy the demand from institutional investors such as insurance companies, pension funds, and credit funds that buy DSCR loans. For this reason, as long as DSCR loan program guidelines for subject property and borrower are met, there is a very high probability that your loan will be funded without delay. Compare this to banks, which may subject you to months of underwriting before ultimately rejecting your loan application for reasons unrelated to your application. Cons of DSCR loans. 1. Strict guidelines. The largest and healthiest part of the DSCR loan industry is 1 to 4 unit residential investment properties in non-rural markets, where the as-is value and the purchase price is $100,000 or higher, and the guarantor's credit score is 680 or higher. If an element of your transaction does not fall within program guidelines, your loan will either be declined or require an exception, which can cause delay. DSCR loan program guidelines are constantly evolving to adapt to the demands of borrowers and institutional investors, and to respond to market and risk. A good DSCR lender will knowledgeably and transparently communicate program guidelines, proactively communicate to identify potential issues, and set expectations in a clear and thoughtful manner. 2. Shenanigans. There, we said it. The DSCR loan industry is fast-growing and loosely regulated, attracting loan brokers, private lenders, and salesmen who are not knowledgeable about program guidelines, not expert in structuring your loan to meet your specific goals, not capable of closing your loan in a timely manner, and not truthful or transparent about loan terms. At Offer Market, you can expect the most competitive term sheet, expert loan structuring, streamlined processing, and complete transparency from your instant quote to your settlement statement at the closing table. 3. Higher interest rates. Given the demand for DSCR loans from institutional credit investors, the credit spread or risk premium has decreased, making DSCR loan interest rates from the most competitive DSCR lenders nearly the same as bank loans and conventional investment property loans. In fact, Offer Market's DSCR loan interest rates index at the time of this video was 0.8% lower than the prime rate offered by banks to prime borrowers. Therefore, we include an asterisk on this con because it is not always true and may not be true in the future. In summary, the pros of DSCR loans include streamlined underwriting, attractiveness of loan structure, and reliability. The cons of DSCR loans include strict and evolving guidelines, shenanigans, and potentially higher interest rates. For the vast majority of rental property investors who want a streamlined borrowing experience with a high degree of certainty that their loan will be funded on an accelerated timeline, DSCR loans are strongly preferred as long as property and borrower guidelines are met. To grow and optimize your rental property portfolio, visit offermarket.us for your instant quote and pre-approval.